I'm Alana. I work in business development here at Alabama Housing Finance Authority. AHFA was created in 1980 by an act of Alabama legislature. AHFA is a public corporation and an instrumentality of the state of Alabama, dedicated to serving the housing needs for low and moderate income Alabama families. Since 1980, AHFA has helped over 75,000 Alabama families purchase a home using AHFA's programs. At AHFA, we know the programs we offer are only successful because of the work done by you, our mortgage lender partners. The following series of videos are designed to give you the information you will need about our programs. Also, never hesitate to reach out to me or any member of our staff if you have any questions or need help in any stage of the process. Stay tuned. At the end of the video, there'll be information on how to schedule your Zoom question and answer sessions. Now let's get started. Closing AHFA loans. Loans are serviced by AHFA, doing business as Service Solutions in Montgomery, Alabama. Throughout our training and in our online materials, you may see the name Service Solutions used interchangeably with AHFA. Once the loan is purchased by AHFA, your home buyers will interact with us as Service Solutions. AHFA website. All of the most recent up-to-date information on our programs is available in our All Regs library. All Regs site. The loan delivery and purchase guidelines will provide the requirements for closing, such as documents, fees, title, and insurance requirements. Each lender has their own provider of closing documents. Your company will need to reach out to your provider to ensure you are utilizing the correct package for the AHFA Step-Up program. If your document provider has questions on what documents to use, they can contact our operations manager. Notes, mortgages, and rates. The first mortgage and DPA second mortgage will require a separate note and mortgage. The interest rate on the DPA second is going to be the same as the rate on the first mortgage. The DPA second is an amortized fixed rate loan with a 10-year term. Note and security instruments. Use the FHA, VA, USDA, Freddie Mac, Alabama notes and security instruments typically used for the first mortgage product. Make sure the closing dates on the notes and mortgages and the final CD all have the same date. If the loan does not disperse on the closing date, it should disperse within 3 days. Disbursement per diem interest should reflect that on the CD. Anyone who has signed the security instrument has to be listed on the first page of the security instrument in the vesting section, including marital status. Make sure the vesting marital status agrees between first and second. Make sure your PMI coverage is correct for borrower's income used on your AUS lock. Reduced PMI only allowed for income below 80% AMI. Notes must be error-free, no whiteout, Type-overs permitted. We will not purchase loans without the original error-free, properly endorsed notes have been cleared by AHFA collateral. Mortgage Electronic Registry System, MERS. The MIM must be registered with MERS upon delivery to AHFA to be eligible for purchase, and it must agree with the security instrument, county, borrower, property address, note amount, note date. The security instruments must include the appropriate MERS verbiage, the MIMS number matching the MIMS summary, and the MERS telephone number. Initial and final closing disclosure. Initial disclosures. Lender must provide evidence the borrower received the initial CD for first and interest-bearing second, no later than 3 business days prior to closing. If the lender is required to provide a corrective disclosure, we need evidence that the borrower received 3 additional business days waiting period prior to consumption. Service Solutions does not grant waivers for waiting periods. Final disclosure must be dated the same closing date as the note and security instrument. Borrower's name, loan term, purpose, product, and loan type must match the note. Final CD must be executed by all parties. Sellers' names must agree with sales contract, with current owner on appraisal, and current title commitment vesting. We require a copy of the executed seller's CD as well. The settlement agent's name, address, and contact information must be completed and accurate. All parties, companies included in the final CD must also be ran through LDP SAM if not already done. Power of attorney. The power of attorney must be specific to the transaction and include the full property address. The POA must not have been used to sign both the initial disclosures and the closing disclosures. Either the initial disclosures or the closing disclosures must be signed by the borrower in their original handwriting or via electronic signature in compliance with e-Sign Act. The POA must be dated such that it was valid at the time the loan documents were executed. The POA must be recorded prior to the recording of the security instrument. The title policy cannot include exceptions based on the use of a POA. The person designated as the POA on behalf of the borrower should sign exactly as the POA dictates. Make sure this is correctly executed on the note and security instrument, and make sure your notary acknowledges this correctly too. Electronic signatures. Be reminded, e-signatures are not acceptable on closing documents such as notes, deed of trust, riders, etc., or final CD. Those documents must be signed in wet ink. We will accept e-signs on other closing documents apart from the ones listed above. Riders and attachments A, legal descriptions, must be recorded with, not separately. Homeowners insurance. Hazard insurance policy. Hazard policy must have dwelling coverage of at least the first mortgage loan amount or provide for 100% replacement cost and must be effective on or shortly prior to the closing date. Must be an annual policy with evidence of paid premium on the CD. If paid outside of closing, a paid receipt is required. Coverage must be effective on or before the note date. Original policy required when the closing file is delivered to Service Solutions. Of course, you can see our guides for when a binder is acceptable. Maximum deductible / minimum $2,500 unless higher amount required by state law. If the borrower changes insurance coverage or company prior to our purchase, there can be no gap in coverage, and we would require evidence of the new policy and cancellation of the old one. Condo townhome insurance policy. Provide the certificate of property insurance. Condo townhouse insurance policy. Provide the certificate of property insurance. Must be current, cannot expire within 60 days of loan closing. Must cover borrower and the property address. For condo units, we must have evidence of the condo's master policy. A deck page is acceptable. If a master policy doesn't include studs in coverage, the borrower must obtain an H06 policy. The H06 coverage must be effective on or before the note date. Must have a valid policy number as well. Flood certification, flood insurance policy. Lenders must obtain an initial flood determination from a third-party vendor for every loan submitted for purchase. Flood certifications must be a life of loan flood certification. If no flood maps exist for the property location, a flood zone cannot be determined. AHFA will not be able to purchase the loan. Flood cert must contain correct property address. If property is in a flood zone, flood insurance is required. Lender must provide written evidence the borrower was notified. Flood insurance policies. Annual policy required, must be effective on or before the note date. Covered loan amount or provides 100% replacement cost or a max out at FEMA limit if loan is in excess of the limit. At least one borrower must be named as insured. Properties located in a flood zone required flood insurance. Maximum deductible, $5,000 for Freddie, $2,500 for FHA and VA, $1,000 for USDA. Mortgagee clause must include lender's name and its successors and/or assigns. Mortgagee clause for post-purchase change notice should be Service Solutions, a Department of Alabama Housing Finance Authority, ISAOA, ATIMA, P.O. Box 242-967, Montgomery, Alabama 36124. Escrow items. All taxes should have been escrowed for a 10/1 first available payment date. CD should show escrow sufficient for this payment date. Evidence taxes are paid on the CD will be required at that point or will need to provide evidence already paid. See our loan delivery guide for specific state tax and escrow information. The tax information sheet, tax certification, must be completed and signed by the settlement agent. if it contains a signature line, in its entirety. Make sure it includes the property address, legal, parcel numbers, the full name and address of the taxing authorities, current owners' names, last amount paid, next amount due, and next due date must be completed. Next, tax amount due must be correctly annualized. Next, tax amount must be correctly annualized and collected in escrow on the final CD. AHFA requires a 2-month escrow cushion. AHFA does not handle escrow payment of HOA dues. Beginning balance disclosed on the initial escrow disclosure must equal the initial escrow payment at closing, line G on the final CD. The initial escrow disclosure, PITI, should match the first payment letter. Title commitment and policy. A signed title commitment must be delivered with the closed file and no older than 90 days at note date or 180 days for new construction and must contain the following: effective date, land ownership, exceptions to the title policy, reference to endorsements as applicable. Coverage must be equal to the loan amount of the first mortgage. No coverage is required for the second lien. Legal description should match the security instrument and the appraisal. The proposed insured lender policy must be the originating lender and must include its successors and/or assigns. Must confirm and document in the loan file that the property seller is the owner of record of the subject property. Must show taxes paid if closing date will be within 60 days of tax due date. The property seller must be the owner and on title at the time of the initial application. A transfer of title ownership anytime after the initial loan application and prior to closing is not acceptable. Schedule B items such as delinquent taxes, judgments, outstanding mortgages, and any other liens must be paid and reflected on the CD. Any exceptions to the title that would prevent the perfection of title for the servicer's ability to foreclose must be addressed and affirmative coverage obtained over such exceptions. Title commitment and policy. Chain of title must include dates of transfer, the transfer or transferee. Conventional and VA loans require a minimum 6-month chain of title, including new construction. USDA loans require a 12-month chain of title from the effective date of the title commitment, including new construction or construction to permanent loans. FHA loans require a minimum of 12-month chain of title and must be within compliance with FHA anti-flipping requirements. If there has been no convoyance verbiage such as 6-month chain of title, clear, or there have been no documents convoying the land in the past 6, 12, or 24 months are acceptable. A copy of the warranty deed separate from the title commitment will not be acceptable. It must be contained in the title commitment. All required endorsements to the final title policy should be noted. Please order them upfront with the commitment. The commitment is what we must base the final title policy on. If it doesn't contain the documented endorsements covered, we cannot assume they will be provided. Unacceptable title exceptions. Unpaid taxes. Real estate taxes must be shown as being current or as being future taxed that are not yet due and payable. Any situation in which taxes are not current is not acceptable. If the tax bill has not been issued, the lender must provide proof that the taxes are not delinquent. Survey exceptions. If surveys are not commonly required in a particular jurisdiction, the lender should provide an Alta 9 endorsement, and if applicable, a CLTA endorsement 116. If no survey has been done, and there is no evidence within the title commitment that an Alta 9 will be issued, a letter from the title company on company letterhead or endorsement to the commitment stating they will issue a final title policy with no survey exceptions will be required prior to purchase. If the title company will not issue a policy without a survey exception, AHFA will not purchase the loan. Right of first refusal cannot be part of the title commitment or policy. No resale restrictions that will limit our ability to foreclose. Existing mortgages not paid in full as required. Judgments not paid and reflected on the CD. These are items that we've had issues with in the past. Helpful information. Listed below is our FHA Transfer ID, Fannie Seller Servicer ID, Freddie Mac Seller Servicer ID, MERS, along with our tax ID number. Contact information. Our main number listed below. Brian Hunt, Single Family Operations Manager. Ashley Rawlinson, Closed Loan Review Supervisor. Contact me for questions or to schedule a Q&A Zoom meeting using the contact information below.